All right, it looks like we're live. Good afternoon, everybody. I'm David Monroe. Welcome to Multifamily Market Insights. Now, I know I said in the group down below that I wasn't going to go live until around 6 p.m. Central, 7 p.m. East, and then I'd start doing that on every Tuesday. But we had some internet issues during a workshop I was holding earlier. So that said, I went ahead and wanted to get something in today. So I thought I'd go live now and at least get something on the board. Really want to start going live all the time. Look, this StreamYard, I love this StreamYard. I'm having a blast with it. So hopefully we won't have the internet issues I had this morning. I had to reschedule my workshop for this evening. And most everybody can make it to that. So that's a good thing. We did have one person that said she'll be a little bit late, but that's fine. All right. So I asked what you wanted in the training. I had a couple of people respond, and one asked for relationships and negotiations. Another one asked about financial analysis. So today I'm going to talk about financial analysis. It's just going to be brief. See, I've got somebody on here. I can't see who you are. If you can put in the chat box and just say hello, who you are, that'd be great, where you're chiming in from. Love to hear from you. And so let's get started. I'm going to show my screen here. So let's fade into my screen. Hopefully you can see my screen now. So what we're looking at is Costar. And no, I don't expect most people on here to have Costar. Now, there's some people that will, and most of you won't, but that's okay. I just want to show you how to get data. So a lot of people will go into, and including brokers, and brokers are the worst at this. And I'm a broker myself, and I used to be bad at this, where we will take the trailing 12 months on a T12 for an apartment complex, and we create a pro forma based off that T12. Well, that is not the right way to create a pro forma in any way, shape, or form. You need to know what that market's doing. And when we do a full, complete market analysis, we go in and we do an economic base analysis. We know what jobs are coming in or going out. Either way works. It's either positive or negative. We can calculate a future demand. From that future demand, we can then go in and start to look at our demand and supply. Well, I'm going to assume we've done all of that up to knowing what our future population is going to be in 6 to 18 months. Now, that's a very long process. We're obviously not going to go through all that right now in here, but we're just going to assume that we have a population growth of, it doesn't matter, let's just say 10,000 people in the next 18 months that are on the rental side. So we determined the ratio between renters and owners in this market. And this is the market I live in, Mobile, Alabama, that you're looking at. So all I want to do now is I am currently filtered to Mobile, Alabama County. So Mobile County, Alabama. It is also the same as the MSA. If I was to go to market and put in Mobile, the same thing would show up. The next market next to us, which it actually comes up this way and over here, is the Daphne Bay Minette Spanish Fort MSA. And that one should really be part of ours, but they don't count it in here for whatever reason. But we're going to leave it out. We're just going to look at Mobile. Right now I have all units. If I want to segregate this down and say I want to look at 100 plus units, then that will segregate it down for me. If I want to do 50 plus units, I can do that. If I want to do from 5 to 50 units, I can do that. And really, I can even type in here if I didn't want 5, if I wanted to go 2 to say 15 units. You notice 15 is not here. I can even do that. Okay, but we're going to go with no minimum and no maximum. So we have all properties in the market. This is going to skew a little bit because your numbers are going to be a lot different under 100 units than over 100 units in this market. I just want to give you an idea of how to pull this data, whatever it is you're using, whether you're using Yardi, Axiometrics, Real Capital Analytics, Reese, Costar, any one of those, you should be able to pull this type of data. If you can't, and you're in a tertiary market like I can, you really need to consider investing in Costar. You can't beat the data that you get for smaller markets and smaller properties. So the other thing I do is I go to search and I just put in the types I want. So I don't want corporate, I don't want military, I don't want senior, and I don't want vacation. I do want my existing under construction and proposed data because I want my supply side data. And it doesn't matter with the class type. Okay. So all that, oh, one more rent type. I want market. And in this market, notice right now I have 200 properties. If I go market affordable, it's only going to increase by 8. So it doesn't really matter. It will pull one of the nothing but affordable properties. And I just happen to know that from this market. It's called Hallmark off Cody Road. I don't want that property included in this. So I'm going to uncheck this, that those 8 properties aren't going to matter in my calculations. I then come over here to analytics. You guys see that right there, analytics. I click on analytics, and that kind of tells me a story of a market. Now, very interesting here is that through COVID, it looks like Mobile has done considerably well, especially 12-month absorption. I got to be honest. I haven't looked at this market in a while. Yes, it is my market. There was a lot of, we had 742 units coming on. Looks like there's another 70 yet to come online, and that's downtown Mobile. So we had 700 plus all downtown Mobile. We had a couple in Midtown, majority of it downtown. And I kind of had a bleak look. At the time they were under construction, Class A properties were sitting at about 12% vacancy. And I was preaching kind of a sign of warning that this wasn't going to be a good sign for our market. Now, looking at this, I mean, look at our prior period vacancy of 9.9. Now we're at 7.9. We've gone up or down in vacancy 2 full percent. That is amazing that we are sitting here. This is actually lower than our long-term average vacancy for our market. So I got to be honest, when I'm wrong, I say I'm wrong. And a year and a half ago, if you're listening to this and you're in Mobile and you were one of those that heard me, I was wrong. Mobile has absorbed these units amazingly, somehow, some way. I don't know how they've done it, but they did it. And it's looking really good. Our rent growth is up. The price per unit is up. Cap rate's down a little bit. So cap rate's actually down. I don't know why CoStar's showing it in red, because prior period was 6.8. Now it's 6.6. Okay. Class A is driving this and some of the better Bs. Because again, we're from 2 units all the way up. So you've got some 7, 8 caps in here mixed in with it. So if we were to do just the class, as a matter of fact, let's just go do that real quick. So I'll go filter, I'll come down and we'll just look at Class A, and you'll see when this settles out that market cap will drop about 6 basis points or 60 basis. There you go, 50 basis points. So 6.1. Okay, we went from 6.6 to 6.1. So we dropped 50 basis points. But you could see it's still lower even from prior periods. So Mobile's never been in the 5 cap range. It's always been a 6% market. So it's made it attractive to investors, even though some of the latest is coming out pretty high on the price per unit range, when the prior 12 months was 126K. Now we're at 133K a door, again, for Class A property, which I was just working a property with a friend of mine, or a market in California, where the price per unit was 435,000 a door. So don't feel so bad here. But this kind of tells you a story. I can look here and see what my long-term average is. My 10-year average is almost 15% vacancy. We got 80, this gray, if this will get out of the way, that gray box right there is your long-term average with current vacancy sitting here. But when we look at this absorption, look at this absorption, 158 delivered in the last 12 months, 347 absorbed. Who'd have thunk it? In Mobile, Alabama, who'd have thunk it? Not me. I was preaching a different story. So I'm eating my words. So again, for all of those that are listening, you guys don't listen to me ever again, I guess. I don't know what to tell you. But it did it. It absorbed it. So Mobile's doing really well right now. Rents have come down a little. We got a $7 decrease. And I think that's because these Class A's are finally all absorbing. There's still one property that hasn't absorbed very well downtown. It's more of a garden style, the newer style flat roof. It's 5-story, right on Water Street, although our water here is all industrial in Mobile, in the downtown area. And it's still about 25% vacant. And I think that may be what's driving that Class A rent down. So let me come back to filters. Let's get all properties again. So let's take that back off. And I want to go in and I want to show you the data once this comes back up. So this is, and you can pull reports for this. I can come up here and I can go reports. And the really good report that comes out of all this data when this comes up is right here, this custom market report. So all this data, if I scroll down, you get all these charts, graphs, bar charts, all pie charts, all this data, all is in that special market report. But what I want to show you is this. This is powerful. So right in front of your eyes is the supply data for Mobile, Alabama. So if I'm doing a demand supply and I know what my demand is, my future demand, I can come in here and I can look at my supply data. So I know I have 20,000. Well, this is QTD. So let's go to Q3. So there's 20,552 units in 197 properties. If I come all the way over, I can see that I still have 70 units under construction. We can go back and say 149, but we'd want to show that, what is that, 79 that have delivered and absorbed. So we can show absorption. So we can figure out, we've got our occupancy and we have deliveries and 20, we didn't deliver anything in the quarter. We delivered 79 so far, and that's this 79 right here that we talked about in 2020. So quarter to date, fourth quarter, there's 79 that have delivered this quarter. I can go annual. So if I click this, and again, this is all history. It goes all the way back to 1990, although Costar, well, it goes back to 2000, sorry. So their data is actually really good in this market for the most part. We start getting to some of the supply data. It's a little less down in the 2000s, but gets real good up here. So here it is annually. So we know we've delivered 259 units year to date, 311 last year, 268. And if we remember, look at this absorption. This is the shocker right here. I can't believe this. Now in 2018, I was preaching this would not happen. And I'm eating my words. I was wrong. 100% I was wrong. I did not think these would absorb, and I'll be darned if they didn't absorb. So we don't know the effect because a lot of these are downtown units. Downtown had no units. We do not know the effect of COVID and what the people that move downtown, whether they want to get out of there and go back to the suburbs or whether they're going to stay there. My guess is in Alabama, they're probably going to stick around. They don't seem to be too scared about COVID. And, frankly, I don't blame them. We seem to be doing okay. We're not like the rest of the country. Anyway, we're not going to get into that discussion. So I just wanted to show you that Costar provides, and the other products do too. Reese does, Axiometrics, Real Capital Analytics, Yardi, they all provide the same kind of data. It's shown differently, but this gives you the ability to be able to go in. Now I know what the asking rent and the effective rent is on different types. I can even come up here and I can get my 2-bedroom rents. I can get my 2-bedroom vacancy. I can get my 2-bedroom absorption and what's under construction. So this gives me the ability to go in and now extract that data out. And now I've got something I can put in my financial pro forma that makes sense. And there's an educated, it's still a guess. I mean, anything's a guess, but at least now we have starting points. So when you get an offering memorandum from a broker and it's got market rents on it, grab Costar, grab Reese, grab Axiometrics, grab Real Capital Analytics, go in, look at the data and verify that those asking rents or those market rents are actually accurate. And really you want to be looking at effective rent, especially if it's not showing any kind of concessions. That's going to be the big deal. And that's really the number one takeaway from this, is that when we do that market analysis, we are looking for the outputs from the market analysis so that we have the inputs into our financial feasibility analysis. And this allows us to make our decisions a lot more accurate and not as much of a guess. So when you're looking at that pro forma, you're going, this guy lied to me or not. Go in and pull your numbers yourself and you've got it. So I just had two people come on just as I'm getting ready to end this. I'm going to stick around for just a second because there's about a 30-second delay here. So as I'm talking, you're not going to hear what I'm saying for about 30 seconds. So I'm going to stick here, see if there's any questions. I don't know how much you guys heard, and I don't know who's here. I don't see any comments yet. Excuse me. And then if there's no questions after about 30 seconds or so, then I'm going to go ahead and end this live stream. And get ready for the class that was supposed to happen at 10 a.m. this morning, but now we're doing it 6 p.m. this evening. Let's see, one dropped off. We still got one on. I'll wait another 10 or 15 seconds, and then we'll exit out of here. I hope you guys got something out of this. Look, one more thing. This data, I can pull this data for you. And I do that for my inner circle members. So there is a link in the description of this video. If you click on the video and watch it kind of full screen in the window on Facebook, same thing in YouTube. If you go into the description, because I'm live streaming to both right now, then you will find a link to my inner circle. It is literally only $47 a month right now. And if I'm asked for this kind of data from my customers or my members inside of the inner circle, I go in and I pull the data for them and I send it to them. So if you would like data like that, then click the link that's in the description and go ahead and get joined. That price will be going up when I get to 20 members. I'm at 4 members right now. Woo, a whole 4. I literally haven't even marketed this to the market yet. So no launch, just a couple of people know about it. That's about it. But when that gets to 20, price is jacking up over double. So, all right, guys, that's it. Have a great rest of your day. And I will try and do this again. Definitely by next Tuesday. It'll probably be a little bit more structured, but you probably see me come on at least once a day. I'm having a good time with StreamYard, just having fun with it. Anyway, talk soon. Bye. Got to find the end broadcast button. There it is. See you guys later. Bye.